In this presentation, we'll take a look at an outline of the project that we will be putting together with regards to bank feeds. Let's get into it with Intuit's QuickBooks Online. Here we are with our Get Great Guitars file. If you don't have access to this file, that's okay. You can enter this data into your file if you have a practice or kind of dummy file that you're able to work with, which would be great, or you could just follow along and get the idea of course, entering the bank feeds. We're going to be considering Get Great Guitars, which has 2 months of data in it at this point in time. That 2 months of data has basically been input with full service or full cycle accounting. In other words, if I jump back over to the QuickBooks desktop version, and we consider these vendors and section and the customer section as we did in a prior presentation, the vendors for that 2 month worth of data, the vendors section, the purchases section, or the accounts payable section, has been entered with entering bills and then paying those bills. In other words, going through accounts payable, and we dealt with invoices, full service invoice, or we dealt with inventory, the full service inventory, which is entered with regards to the purchase order, then receiving the inventory and making the payment for the inventory. So that's an accrual basis for those first 2 months of data. We also entered an accrual basis with regards to the customers. That means we invoiced the customers, we received the payment, and then we grouped the deposits and put them into the system. We also created sales receipts and grouped them and put into the deposit system. So full service accrual basis, or full cycle accrual basis for the vendor and customer section. And so we have the financial data that's being reflected here in the financial statements for those 2 months worth of data. Up top, I have it through 12/31, but there's only January and February in there at this point in time. And you can see then we have that reflected by the accounts receivable and the accounts payable on the balance sheet. And of course, if we go to the P&L, then we can see that income is going to be reflected or recorded on an accrual basis when we create the invoice or the sales receipt. Expenses recorded when we enter the bill. What we're going to do now is go to the second month. So I'm going to enter bank feeds for the second month, and we're going to convert and say, well, what if I just did not do the full service cycle here and said we're just going to convert completely to a cash basis system, be completely dependent on the bank, and therefore not enter any bills or not enter any invoices either, and just be dependent and say anything that goes out of the bank is an expense, and anything that goes into the bank is basically going to be income, unless it came from the owner, in which case it would be a deposit or a loan amount. So I'm going to take the exact same transactions. In other words, I'm going to take the exact same bank reconciliations that we had for January. Here's the January bank statement. This is what actually cleared the bank. And then I'm just going to duplicate that for March. So we'll duplicate that for March as if we had the exact same transactions, this time entering it into the books with bank feeds and only seeing the actual, data that on a cash basis that hit the bank, and try to record these transactions just on a cash basis, not the full service. And then we could take a look at some comparisons between what would happen on the full service. We could take a look at the difference between the profit and loss for March, when we just did a cash basis, versus January when we had the full service bookkeeping. So this will be a fairly basic kind of project. We'll enter the data in on the bank feeds. We'll set up the bank feeds. We will enter this data in with the bank feeds, which will basically mirror this bank statement. And then we could do some kind of compare and contrast in terms of what we did in January and February, which was the full service accrual system, and then March and April. And as we do that, we can consider different options and how you might deviate from a completely cash basis in order to accommodate for certain accrual components that might be useful for you. And then after we do that process, we'll do that for 2 months here, so you can see that the second month of data input into the system, which oftentimes is a little bit easier because QuickBooks will start to memorize certain transactions. And then after that, we'll get into some more complex type of things, just looking at different scenarios and situations that could come up with regards to bank feeds and how you can deal with those.